Hi, good morning, guys. Can everybody hear me? Hey, Bob, Bill, Ava, Pep, Scott, Corey, Francis, Fred, Randall. Good evening, Raymond. Yeah, just a little overworked. I finally made some headway here with this volume analyst for Ninja 8, though. Actually, Jeremy just uploaded a new beta for Bloodhound and Blackbird this morning, and that seems to have fixed a couple of other issues. So I was actually just testing that. No, Bloodhound and Blackbird for Ninja 8 are still in beta, and it's not easy programming at all, especially for a new platform. Some of the issues that I was dealing with, though, had to do with the multiple time frame stuff that we're trying to do with this relative volume on the tick charts. So past few sessions, the past few months, we've been working night and day trying to get all of this stuff put together for Ninja 8, and it's been kind of like this. So I've been developing this stuff for a number of years now, and Ninja 7 had limitations. We could only do so much. You couldn't, you didn't have a whole lot of processing power with NinjaTrader 7. And Bloodhound and Blackbird have been working on Ninja 7 for a while now, and I had started to get to the point where I was programming some of this stuff for automated systems. So basically what I'm trying to do is get to the point to where I can automate some of the things that I'm looking for and trying to do. I started down that road and got pretty far with Ninja 7, but to get the exact precise signals out of the volume, I really needed this relative volume for the tick charts, and we couldn't do that for Ninja 7. So now that we have everything moved over to NinjaTrader 8, I'm actually getting to the point to where I can start automating some of these more advanced signals, with the volume. So Bloodhound and Blackbird make that possible. Blackbird for automating the entries, and then Bloodhound for kind of tying all the signals together. So the main issue that I was having with Blackbird before was it wasn't showing Bloodhound at the top of the chart when I had it enabled, but he's fixed that. The main issue that we were having with the relative volume had to do with the multiple time frame stuff. So I finally got it all worked out. Doing the relative volume on the tick charts, I've talked about this the past few sessions, but it's a very, very complex algorithm just to be able to do it. And then there are about 5 different ways you could do it. The main one that I was wanting to do still wasn't really factored in right. So just to even explain it, I tried to explain it a couple of days ago. What was that, Wednesday? During that explanation, I realized there's something still a little off here. So that's what we fixed out over the past couple of days. And now what that allows me to do, for instance, let's look just at the tick chart. Okay, so right here, you've got relative volume showing on the top panel, and then the raw volume, the normal volume, the total number of contracts traded in this lower panel here. Okay, so this is about 6:10 in the morning. So in order to get that relative volume, we can do a couple of different things. We could look at just the time that it took. Let's say we're just looking at this one bar right here. We could look at how long it took that bar to build, which it looks like 11 and 36 seconds to 12, and so about 30 seconds. So that's about a 30-second bar. All right, so I could look at, for the relative volume, we're looking back at the typical or the average amount of volume that trades for that time period over the past several days. So I could look at just that 30-second period over the past few days, do that average, and then compare this volume to that average. But in order to get the signals in real time before the bar closes, I have to project how long it's going to take that bar to build. And there's really no way of knowing that. Okay, but we figured out a way to do that after about 50% of the bar has finished building. Okay, so for a tick chart, that's really easy to do. For the row bars, that's much more difficult to do. So that turned into a pretty big algorithm in itself, just trying to determine when each of those row bars is going to close. So now we can accurately project how long it's going to take that bar to finish before it will close. And we do that after about an estimated 50% of that row bar is closed, or in this case, for the tick chart, after 330 ticks has passed, because this is a 660 tick chart. And then we can continue to update that value. I think we do it about 6 times per bar in between that initial 50% and up into the time it closes. So we're getting the signals in real time after 50% of the bar has built. And if that estimation is off by any amount, it will gradually get more and more accurate until that bar closes. Everybody kind of follow that? All right, so that's step number 1. And then step number 2 is to determine, okay, well, do you want to actually compare for the relative volume calculation? Do you want to compare if this is only a 30-second bar? I mean, what if it's a 5-second bar? You don't really want to compare that 5-second period with just a 5-second period over the past 3, 4, 5, 10 days, right? Because then that's such a tiny sample size to compare the volume to. It's just not as precise as it could be, because at any point during any day, just taking a random sample of 5 or 10 or 30 seconds can produce quite a bit of variance between the amount of volume that might trade today versus yesterday or the day before for that 5 or 10 or 30-second period. So we've got it a couple of ways. It's 3 different ways now, but you could just take that period, in this case 30 seconds, and you could do it that way. You'll then have quite a bit of variance from one bar to the next, and you can get some of these 2,000, 3,000, 4,000% relative volume bars. Or you could compare it to a minimum period for the relative calculation. So I elected to do that by default, which is the way I had designed it to begin with. But as we start building this stuff out and realizing, wow, there's 5 different ways we can do this. What's the most accurate? What's the best way to do it? And that kind of stuff just, it takes what it takes. It takes as long as it takes to flesh this stuff out. So this is really completely new territory for the trading industry in general, but it's really pretty amazing. So rather than comparing just the amount of volume for that relative calculation, just for that 30-second period, I'm setting a minimum value of 2 minutes so that I'm not taking a smaller sample size historically that would be smaller than 2 minutes. So I'll take that 30-second bar, which would be 25% of a 2-minute period, and I'll compare that to 25% of the average volume for a 2-minute bar over the past few days. You see, it's almost like, I don't want to say it's averaging, because it's not exactly doing that. It's kind of making it, it's increasing the sample size to a large enough value that will essentially eliminate a lot of these really huge 3,000, 4,000, 5,000% bars that kind of skew the signals for the next 10, 15, 25 bars. So it's much more accurate this way. Okay, so that's the most important thing that we've done over the past few days. So I have this version. I know a lot of you guys have already downloaded the last version, so I have this version ready to go. I'll upload it when we get done here. But so that's kind of where we're at now with the whole relative volume calculation for the non-time based charts. We finally have it completely sorted out, and it's working pretty well. I mean, I joke around about how this stuff is, but it really is like rocket science for trading. I hesitate to say that because that's a lot of people do try to, form fit physics and equations that really have nothing to do with trading. But we're starting at the fundamental level, which is volume, which is what creates the price action. So it's that trading of volume, that changing hands of contracts that actually creates the price. So that's what we want to start with. And I've finally done it. All right, let me just answer a couple of questions here. The volume analyst runs independently of the readers. Yes. Yeah, and you don't have to use the readers. I mean, if you're not running Bloodhound or Blackbird, then yeah, you don't need it at all. It's specifically for building out systems, trading systems in Bloodhound and Blackbird. Just bear with me one second. If you guys have any other questions, just go ahead and add them in and I'll take them at the end here. This is not formal. I don't have a lot of, webinar presentation type material ready. I've been focusing more on getting all this stuff done and working properly rather than trying to market it. I don't really care to market it, to be honest with you. But I do have a lot of salaries to pay now. But yeah, I'm not trying to convince anybody of anything. But I will show you some pretty cool stuff here in a second. All right, so I just want to go over a couple of trades that I had taken this week in the room. They were really pretty nice ones. So this was one on, what was that, the first? Okay, so this is what I had taken on the first. So this is in the trading room. So I'm setting this up. The 6E had turned up from probably the most perfect and beautiful area that we have seen in forever. And it put that low in right there, which is just, totally perfect right there. The lower median line, right where the 100% warning line of the channel intersects it at the exact day that they intersected, which is another really cool thing about market geometry. It pinpoints not just price, but oftentimes both time and price. We had turned up there. I mean, you can see how many areas it was. I think it was like 20 different areas that came together right there for that low. So once we had turned up after, a really huge 5 waves down into that low. So this is a big 1 and a 2 and 3. And I'm then looking for a wave 4 up to come back inside of this previous 4th wave here. Okay, so we had already started turning up. We had put in what looked like 3 or 5 waves up, and then we started turning back down on June 1st. This is the 7-20-minute chart. So this is 2 bars per day. So this is the volume analyst here on Ninja 7 on a 720-minute with the relative volume. So you have that big selling climax there, followed by a churn bar. That's a 2-bar pattern that we look for all the time. It's like a completed selling climax. So this is just a selling climax bar. And then if it's immediately followed by a churn bar, then that would be a completed climax where you've actually not only had a very wide-ranging high volume bar to the downside, but you then have an obvious sign of demand coming in with a narrower range and higher volume per range. So volume per range is one of the better ways that we have to identify, when you actually have demand or support coming in at a low, or supply or resistance at a high. So if you're coming down very quickly and it takes a certain amount of volume to move that distance, if then you get close to the same amount of volume or even less, but the range of the bar is much narrower than the preceding range, then that means you have very high volume per range. You're dividing the volume, total volume, by the range of the bar. And if it takes dramatically more volume to move the market every tick further than it was previously taking, then obviously at a low, you've run into some support, which is demand. So that's a very clear sign of demand. If you're coming down into an area, you get that selling climax, and then you get a churn bar, meaning a churn bar is very high volume per range, then you have a very obvious sign of demand. That doesn't always necessarily mean that it's going to turn back up from there, but you have a much higher likelihood of it actually doing that if you can see that major demand coming in. So at this low, I mean, we had the highest demand that we've had in over a year and a half or something on this chart. So just a huge amount of volume coming in at that low. And then when we turn up, I'm looking for the first big higher low to get long from. Okay, so on this is that low I was just showing you, and this is June 1st in the trading room. So we've already turned up. You can see that big major swing high here, and then we've turned down into that morning, which I think was the 31st, Friday, into June the 1st, into the morning, we had already been turning back down. So I'm looking for that completed 5-wave move down to break this low and to hit an upsloping channel. And that's what we do. Here, I'm just kind of mapping it out, lining everything up, kind of explaining what I'm looking for. This upsloping channel, which is larger, sloping in favor of the trade. The downsloping channel, which is almost flat, is quite a bit higher than that upsloping channel. So we've got that gap in there. So typically you'll break through one to get to the other if they're spread out a little bit like that. So that's what I'm kind of explaining here. We're getting close to that average daily range low right there. And I'm looking to buy any sign of demand coming in off of that low. So you literally have, in cases like this, a very, very short amount of time to make a decision. Most people aren't going to be looking to buy this, for one thing, because it's screaming to the downside. You've got most of the public jumping in, going short right there. And that is who, of course, is filling the orders of the guys that are sitting there with their bag open, absorbing all of those short sellers. So you see this here? So this is what I'm now calling the row bars. This is, before we called it the RTS bars, because it's made up of a hybrid between range, ticks, and seconds. So this is the RTS2, which sort of emulates about a 2-minute chart, between about 1.5 minutes and maybe 3 minutes sometimes. Okay, so here we're coming down very, very quickly. Of course, you have all that very high volume per second, as you would with a huge amount of volume coming in as fast as it was, screaming to the downside there. And then you see this 2-bar pattern here. You got the big selling climax. You start getting these climaxes back here, but you haven't broken those lows yet. And I have a very precise area that I want to buy off of, because it's the market geometry that provides the areas for the next likely major swing high or low. Okay, so I know exactly where I want to get in. I just have to see something very specific in order to do that. And this is what that is. So very, very high churn bars, very large churn bars off of that area that I've already defined in the market geometry. I think, was it Monday? There might have been some retail sales or something like that, but that was actually back in here. So you might think this was news of some kind, but it really wasn't. It was just the typical kind of V bottom, which we see so often at the end of a lot of these major corrections, that then stops on a dime right off of the areas that we would expect the reversal from. So, when that market's going straight down like that, you don't really feel too brilliant when you try to buy that and then you immediately get stopped out, obviously, right? You kind of feel like an idiot. But if you have the tools in place, kind of help you identify, what's the precise area where it's likely to turn from. Number one, you have the patience to wait for that area. And then if you have the tools to confirm the area, which would be volume measured properly and applied properly, then you wait for that signal off of the area to confirm that the market's actually ready to turn from that area. That's what I'm doing in this case. And, you can see the signals in just the standard relative volume and volume analysis that we have for Ninja 7. But if we go back and look at this a little bit closer here on Ninja 8, it's It's pretty incredible how huge this relative volume was. So even with averaging the volume over a 2-minute period, and these bars are literally, I think they've got to be less than 30 seconds. Yeah. Yeah, that one's exactly 30 seconds. That one's a little over. So it started slowing down right here, actually, right when it ticked out that low. So that took a little while to build, and you see how narrow that range is right there? So that's actually a 2-bar pattern there. But of course, I'm not trying to buy that because we haven't yet met the area that I'm looking to buy. And then we get that larger 2-bar pattern here, which we don't quite get right there in the raw volume. Okay, but we do here in the relative volume. And you can see it's just a massive amount of volume. It's 6-7 times what it would be normally at that low. So that's confirming to me that we have a huge amount of demand coming in off of that area, and that it's actually ready to start turning up. So this is one of those weird, I shouldn't say weird, but we seem to see more and more of these recently, where you've got that V bottom. You get the same thing at the top, but you have that really strong move into a low. You don't get any slowdown in momentum and price momentum. I mean, I make exception for this in our rules and guidelines document, but typically I'll look for first identifying the trade that the chart is occurring on. What's the operative time frame? So in this case, we were right here on this 240-minute chart. So this is only about 8 bars on a 240-minute chart. And I'm looking to get up into this area, which I'm still looking to do, by the way. This was a pretty awesome high. We'll cover that here in a minute. But here, I want to identify how much time took up that retracement right there, because I'm trying to find the end of that retracement. I want to figure out, what's the exact price that's going to turn from, what's the next likely target, and how long it took for that correction to complete from high to low. And I want to identify a chart where that correction takes up, let's say, between 30 and about 110 bars. So if I look at the hourly chart, looks like we've got about 29 bars, meaning that this would be the quote-unquote operative time frame. And then I have to confirm that low on the subsequently faster charts. Okay, that's why you see that I have on this NinjaTrader 8 workspace, I only have 4 charts, but I have as many charts as really you would want to have or you could care to use. But I have all those different charts because I'm taking trades on, say, from a 240-minute chart all the way down to about a 5-minute. So I'll identify the operative time frame for the trade that I'm taking anywhere from a 240-minute chart to a 5-minute chart. And then I have rules to confirm that trade, to confirm the area that I'm buying on the faster chart. So if I'm buying an area that is an operative time frame of a 240-minute chart, then I have to have volume divergence on the 15 or 5-minute chart. And then I have to see some pretty sizable churn bars on anything from the 5-minute faster, except for the fastest chart. So it would have to be between a 5-minute and that RTS2, where I would prefer to see like a 2-bar pattern, a big selling climax followed by a churn bar on, say, the 2-minute or the RTS2 at the end of a volume divergence on the 5-minute. So that's probably pretty confusing. I'm telling you all that because, most people will trade with 1 chart or maybe 2, and they don't really have any idea as to what's the likely potential of the next move. They're not really looking at context and trying to determine what swing they're actually trading. So if I'm trading this low here, and I'm thinking this is a correction down, I'm expecting to get what? I'm expecting to get back above this high. So I chickened out of this because I've been, busting my butt trying to get all this stuff done and out and the website done and all this. So rather than sitting there and staring at the charts all day, I just closed it. I held one into here, but I closed one of them here. But yeah, I did hold one to the next day. I didn't wait for that high though. I got out right there. So anyway, but yeah, if I'm going to buy that, then I can't really take an exit until it either gets to my target or I get stopped out. I can take half of the position off once I see a couple of things, but that's really what identifying the operative time frame, where the likely target is going to be, how big your stop should be. That's what all this multiple time frame stuff is really all about. It's about context, identifying the best area for the trade to be taken, what charts you need to confirm that area, and how far the market is likely to move before the next major reversal. That's probably pretty confusing, huh? It took a while to work out, believe me. So anyway, so that was this long. But the most recent one, the most recent really massive trade that I took in the room, see this, let me just stop. This is about a picture perfect volume divergence right at that high and right at this low. So this is one where you would get that in the raw volume at the high there. You see that? So let me just explain this briefly since it's kind of popping out at me, standing out. You've got this really fast move into this high on very high volume. It's over 2 times normal for that time period. Excuse me, then you get the sign of weakness here. So you get the very fast move up, climactic move, sign of weakness, and then you go back up on decreasing volume, and the final amount of volume at the end of that move here, it's also a churn bar, meaning that you've hit supply. You see how it's a narrower range bar than the preceding couple of bars, and it's closing off of the high a little bit. It's got a little tiny body there with a little wick at the top and the bottom. So it's a pretty clear sign of hitting supply. And it's less total volume and total relative volume than you had at the preceding swing high. This is one of the most exceptional patterns for confirming swing highs and lows and confirming into trades, but you have to use it in context. You're not going to try to trade a volume divergence short when the market is screaming to the upside. Okay, it's all about identifying the right chart for the trade that you're trying to enter, and then using the faster charts to confirm that trade, that swing. Right, that's a very important concept. You have the same thing here at the low. You get the really fast move down, huge amount of volume and relative volume. Just relative volume. You don't actually have a huge amount of raw volume. And then you get the sign of strength, and then you come back down and test that low on lower total volume. So that's one of the main confirmation tools that we have. All right, this next low right here was on the 5th. Yeah. This one was just picture perfect, really. Yeah, so this is into the trading room. So I'd already bought that low there. That's the one we were just looking at, which is probably the most difficult trade to get into, that V bottom. But here, this is more standard. This is kind of the typical thing that we see all the time. And this would be, again, about a 15-minute operative time frame. It's kind of in between 15-minute and hourly. So in this case, being that it's really more of an hourly chart that is the setup, this is really, it looks like it's real spread out and kind of wide apart, but as far as total time, it's really not that much time that transpired between these two. But here, it's a little bit more, and it's a little bit smaller of an ABC down, of a corrective wave down, and we're coming back inside of a lot of this overlapping volume that's transacted in here, which you can see in the volume profile. So we're already in that very high volume area, and typically when you get into that, you tend to kind of bounce around a little bit. So you're much more likely to get a really beautiful volume divergence in an area like that. And you typically also have to be quite a bit more patient and wait for the right look and reaching all the areas that you're trying to get to. All right, so I'm just kind of setting this up and talking about, okay, well, this is the next major area that we're looking to get to. I'm just kind of walking everybody through that and waiting to get down there. I think I go over the larger charts and where it's likely going to get to. Yeah, right there. So here I'm thinking, 5 waves up for A, 3 waves down for a little zigzag B wave. And I'm kind of discussing the possibility of maybe I'm wrong about that, and that's only 3 waves up, and maybe it's going to come all the way back to the low. So I'm just kind of setting up a couple of different possibilities. But then once I get into this a bit more, and I start kind of hashing it out, teaching the pattern that it's making, the corrective pattern, and identifying where the next target would be. With a 4th wave, you're typically drawing from 1 to 3, which is 1 here to 3. I mean, I've got all these different possibilities in here, but that's the big 1 down right there. That's that big 3rd wave low, which was so obvious on all those daily and weekly charts. And that's the 2nd wave high. So that's the parallel right there of that 2nd wave. And that's our likely target, right? So I'm talking about here, well, yeah, we've already turned down from a pretty awesome area, but that's likely just the 1st wave up. So I'm looking to buy this next retracement low rather than looking for a short down to a new low, because this wave is complete. So this pattern is complete. And now I'm expecting to get back inside of this previous corrective wave here. Okay, so I'm trying to explain all of that. And then I'm exporting my analysis, which then shows up on everybody's charts automatically. So here I'm identifying the next likely areas. If it does break a little bit lower, then I've got a couple down here. But if it actually comes up and hits my other major targets, that would be, I think, right up in here. So I'm just kind of, yeah. Okay, that's crude. That's a big major low we had there. So yeah, here on this chart, let me just back up a second. Right here. So that's only, I think, about another 20 ticks or so, 25 ticks. So I'm looking to hit that uptrend line here and that big downtrend line. That's a big kiss goodbye line that we're looking to hit. Okay, and get to the bottom of this distribution. So in the volume profile, this is kind of otherly, but something other than what I'm trying to tell you about now, but we're actually going to build this into the volume analyst here within the next couple of months. So it will be pertinent then anyway. But here, just to give you a quick little primer on this, when you've got these big distributions like this in the volume, a lot of people think about value area high, value area low. Well, yeah, but value area high and value area low of the entire profile, or the actual distribution itself. So really, you want to look at individual distributions within the profile. And when you tend to kind of get through the bottom of the value area low, when you have a big, beautiful distribution like this, you tend to reject up out of that. And if we went back up and then get above the value area high, you tend to reject back down. Now, how far that rejection is going to go is really well, I would say it's a function of the market geometry and the kind of pattern that it's in. So in this case, we've had that major swing low and we're turning up. We need one more wave up. So we're much more likely to turn up from a break below this value area low than we are to turn down from another break back up above this value area high, you see? And this is really the first time that we're coming back into this. So we've already been through this value area high. Now we're approaching that value area low of this distribution. and then you'll see it rejects up after kind of putting that sort of a wedge looking low in right here. All right, so this is what I'm waiting to get to, which we do finally do. There's that beautiful low and crude. Yeah, so here I'm waiting to get there. I'm talking about one more wave down right here. I want to get as close to this line as I can. Talking about probably not making it down to the bottom of this downsloping channel because we have so many areas coming in up higher. And then I want to confirm that low, and there it is right there. So here we've got the perfect hit of the bottom of that downsloping channel on the minute chart, only because I've connected that channel to this little higher low here. If I would have connected it to this low like everybody else typically will, then I'd still be waiting for that bottom of the channel to get hit. So that's something you really only want to do when you have these really big wicks and you've got another set of larger areas that it's basically already gone through or just about to be touching. So that's all coming together perfectly right there. I've just bought. And of course, I'm looking to get straight up to a new high. See, there's that big, beautiful low in crude. You see that massive churn bar there? Volume divergence on the 240-minute chart, which is a very, very rare thing. So that's that beautiful low we had in crude. This is gold. It's ES. Yeah, right there. So I'm long now, trying to buy some more if it'll come back down. And it did take out this low, which that little yellow line that I was drawing there. So it did take that out, and that's exactly where I bought right when that happened. See that? So that's how it all comes together there, and that's what I was waiting for, was that volume divergence signal right there, which you can barely see on this screen, but I'll show you now just to show you what happened here. Yeah, so that's it. That's where I got in here. By the time I got in, it had already kind of popped up a little bit. So I don't know, about 7 ticks from the low there. And then I'm looking to get back above this high at least, which is why I'm moving that target up, which it did do pretty quickly. Something that freaked me out though when I was in this trade, we had a huge amount of volume come in out of nowhere, and I'm busy working on the next presentation. I think it was part 3 or something. And can't remember exactly what time it was, but I got an alert because that volume was coming in so quickly. And I kind of thought I didn't have any time to think about it. I thought it was some kind of news or whatever. I still couldn't find anything about why that massive amount of volume was coming in there, but I just kind of assumed it was news, so I closed the trade. And then I closed it. It was up here. It was above 17. I think it was 1710, something like that. Yeah, it was like right in here, right after that really fast move up in the volume. And of course, I obviously regretted that. But I was looking to trade it to the top of the channel. And that's what we ended up doing, of course, was making it right to the top of the channel that I had mapped out here, which was right there. So that's the way the market works. A lot of people that claim, a lot of people claim a lot of stuff. But anyway, this is what we're doing in the morning, every morning. So we put in that big, beautiful low there, and I'm looking to get up to the top of the channel, which it did do here. All right, but this is the tick chart, and the tick chart provides a little bit different channels in the market geometry than the minute charts do. Sometimes they line up. Other times they're quite a bit different. And really, the major target that I have for this is up in here. I think it's actually 119.10 or something like that. By the time we get there, it probably will be about 10, right at 119 up in here. So I'm thinking this is actually now WXY, and we're looking for one more little C wave up. So that would be like this. Sorry. I'm going into too much detail here, but I guess that's my nature. So we would have two ABCs connected. That's a double 3. So being that we haven't actually made it to my ultimate target, yeah, we turned down from the top of this channel, but that's on the tick chart, and I'm thinking, maybe the high is in. It's a likely possibility. I definitely would have exited my long there, but this would be the more expected target. This would be where I would typically expect to make it up to. And you see that? So this was the perfect low that we had on Friday. It just happened at like 5:30. So it was about an hour before the room started. And you see how perfect this upsloping channel is? So that's all lining up right up there, which makes me think, well, that's probably the likely target there. I mean, typically we'll get back inside of this previous fourth wave, and that's actually up there. We haven't gotten inside of there yet. See? It's like you almost did right there, but not quite. So I'm expecting to actually get up inside of this wave before it puts in that final high, and that's going to be the big short. That's going to be the one to hold. So yeah, the 5-minute chart looked pretty good on the Ninja 7 version. I mean, you're not going to have anything like that with any other volume tools that are in existence that I know of that are for sale to the public. But on Ninja 8, we have some pretty amazing stuff here now. So this is the RTS 1 chart. This is the chart that I have Bloodhound on. This is that low that I just showed you there. This is the tick chart. This is that low right there. You actually do have an extreme churn bar in the raw volume right there. This is where I got out right there. 1710, yeah, exactly. That's where I exited right there. I mean, look at that. What in the world was that? Maybe it was news and I just couldn't find it. It was right at, wasn't right at 11. It was like 11:01. So I don't know what in the world that was. But it was a huge amount of volume that came in, and I don't know. I got scared out. I didn't want to sit there and watch it anymore either. So anyway, you've got this big move down here. This is the tick chart. And you can see on the tick chart, you don't really have very many signals as far as churn bars and climax bars in the raw volume. Okay, but with the relative volume, you're actually able to get these volume divergence signals because you're not looking at the total volume per tick, which is what a tick chart gives you. So that's a completely different way of looking at the volume when you put volume on a tick chart, just like putting volume on a range chart. Excuse me, is completely different information. So if volume is on a range chart, you're looking at volume per range, right? But each bar's range is exactly the same. So you're comparing, yeah, you're looking at volume per range, but you're not able to compare the price action to itself. You're not able to look at the difference in momentum and the movement of the market over time with a range chart. A range chart is a very specific way of looking at the market, and you're not going to get as much detail from the price action. You still do get some detail because the range bars can overlap and they can just go in a straight line. So you still can get very useful information. It's just a different way of looking at the volume. So on a tick chart, you're looking at contracts per tick, total contracts per tick. And then, of course, if you divide that total volume by the number of ticks, that's giving you total number of contracts per tick. So if you have something like the ES is typically between 2.3 and 2.8 contracts per tick. ZB is really high. It tends to get above 3.5, even 4 contracts per tick, which seems crazy to me. It's such an expensive contract. I think it's like $30-something per tick. So there's a huge amount of money that trades ZB, and they all tend to be multi-contract traders. Something like gold fluctuates quite a bit, 1.6 to 2.5, something like that. And then 6E is right about the same, between 1.8 and 2.5. So if you have a lot of contracts come in for any given tick bar, you get these spikes in the total volume, the raw volume when it's on a tick chart. You're looking at where a lot of density of contracts came in, a lot of contracts per trade. So when you get these spikes, for instance, just an obvious one right here at this low, see it says 1.4, that's 1.4 thousand contracts per trade there. And we kind of auto scale the top and the bottom of the volume so that we can see the detail a little more easily. But typically, if you just put raw volume on here, just the standard volume indicator, it's going to look like this. So you don't really see, quite a bit of difference from one bar to the next. And that's just the way that tick charts are, really, right? Because you're dividing it by the total number of transactions. So it's a completely different way of looking at volume, and the relative volume lets us see into it quite a bit better and actually see these, really climactic type of volume moves. So it gives us much more detail. So anyway, just because you have very high volume per tick doesn't necessarily mean that you're going to have a reversal. But if you're getting that also when you're at an area, and then you're getting the other volume signals that you're looking for, depending upon the chart that you're on, then that's even more confirmation. So you don't always have very high volume per tick at every turning point. And you can have very high volume per tick just kind of in the middle of nowhere. It just means that somebody with deeper pockets than average are stepping into the market. Sometimes they'll stop it on a dime. Other times they're just simply exiting the position that somebody told them to exit, So anyway, that's total volume per tick. But then if we're looking at relative volume, we're able to take into account how much time transpires within that bar as well, and then compare the total volume to the average volume for that time period, you see. So for instance, right here, this is a pretty good example. Sometimes they'll line up perfectly, where you'll have, really clear sign of supply coming in at a high in the raw volume, and the same with the relative volume. But more often than not, you'll get a lot of turning points where you don't have really anything at all in the raw volume, and then it's the relative volume that's going to give you the indication that high is actually coming in, right? And this is happening as the high or the low is happening. It's not happening after the fact, right? After the fact indicators are pretty much well, they're after the fact. So how much use do they really have? You know, there's a lot of people that create these auto back adjusting indicators, and they're doing back calculations and all this garbage, which is, you know, it's just another, well, it's just a way to deceive people to make money off of them, basically. So everything that we're doing is specifically built for me, for my own trading. And of course, I don't want anything that is not real time. So this is a big buying climax, and then you have a huge, huge churn bar. This is actually just slightly narrower range than the previous bar, so it's showing up as a churn bar, but I think if it were maybe 2 or 3 ticks larger, it would show up as a high density climax, meaning that you still have very high volume per range, but the difference between the churn and the climax in some cases is really just the size of the bar, the range of the bar. So here you have volume divergence at the high, whereas in the raw volume, you don't have any signal whatsoever. So let's get back to this low here. At this low, we've got that big 2-bar pattern. This is one of the main things that we look for to confirm an area. So I said that I wanted to have, for that trade, for that long trade, I wanted to have volume divergence, preferably on the 5-minute, but I would have allowed it on the 2-minute because it's kind of in between an hourly and a 15-minute setup. So I want to see at least on the 2-minute, but preferably on the 5-minute. And we actually have volume divergence here now, even on the tick chart, ending on that big 2-bar pattern there. So yeah, it did actually show up as an extreme churn bar here in the raw volume for that tick chart, but that's not, it's good and it's useful and it's helping to confirm, but it's not nearly as powerful as that 2-bar pattern is, where you actually have a climactic type of volume coming in, and then you get, sorry, on a wider ranging bar, and then on the next bar you get a narrower ranging bar with really just as much volume, or pretty close anyway, but much higher volume per range, which is what that density is, right? It's telling us how dense that bar is with contracts. So if it's a narrow range and high volume, well, that's a very dense bar, you see? And then of course we get the higher low. If you missed it there, that was your higher low churn bar on the tick chart, which you don't then have on the raw volume. So just to go through a couple of other charts here, this is the 5-minute. This is that low right there. So it's pretty much the same as it would be on NinjaTrader 7 for the tick charts, although we do have a lot more control over how many signals, basically the strength of the signal. So there are a lot more options as far as kind of fine-tuning what you want to allow. Like maybe you don't want to allow some of these smaller churn bars or smaller climax signals, or you only want to allow climax bars that also have very high density, like we have right here. So this is actually a climax. It's showing up as a climax because it's wider range than the previous bar, and the range is larger than the average range. But it's such high volume, relative volume, that even when you divide it by the range of the bar, it's still exceedingly high volume per range, which is density. So that's an extreme density climax right there. Extreme density climax. Okay, so that's basically like saying you've kind of got a climax and a churn bar all in the same bar. Okay, and that's kind of, you can see it start to come in right in here. So even though you do have a fairly decent size move down, the volume is so high that if you didn't have demand coming in here, obviously, which you clearly have, the market would have moved probably 2, 3, 4 times as far. because of the amount of volume that's come in there. Does that make sense? So volume is one of the most difficult things to understand and to use well. And I think it's because of that exact thing, where you don't really think about demand coming in as the market is screaming to the downside. But if you're looking at, programmatically, if you're looking at how much volume is coming in versus how far the market has moved relative to how much volume was necessary to move the market over the preceding bars, whatever look back period you're using, then you're able to identify pretty quickly that, well, normally if that same amount of volume had come in, the market would have moved much, much further. And all of these bars, except for that one right there, is closing up off of its low, you see? So yeah, you've got a huge amount of market order selling, but you've got a lot of market order buying starting to come in right there on that bar. And then finally on this bar, it closes well up past the midpoint of the bar. Then you get your sign of strength, comes back and tests it, but we haven't quite hit the area that I'm looking for at that point. And then one more time, you test it right there and then hit all of those areas on a really beautiful volume divergence there, which actually ends on that 2-bar pattern right here on the tick chart. So this tick chart is, I'm basically trying to make it emulate about a 3-minute chart. Sorry, I accidentally hit the mute button. So in this case, we're just looking at 4 charts, and the fastest one would be, between a 30-second and a minute and a half. Then you've got the one above that, which is between a minute and a half and maybe 2.5. And then this tick chart, which tries to be between 2 and 5 minutes, and then the 5-minute. So that might seem like a lot and maybe a lot to handle, but it's kind of really, it's basically what you have to do in order to get all of the information from the volume that you need. So I've said this before, but you don't really have any control over when any of these bars close or open, right? It's just kind of a random thing. It's, maybe it's not random because it's based on settings, but as far as the exact time that it closes, well, it's a random time. So you want to be able to look into sections of that time based on different settings to get a more complete view of what's actually happening in there with the buying and the selling, which is what's creating the price. So to get a full view of the volume, you really need, I would say, at least a few time frames. I would say 3 at a minimum. So here, this is that low on a 2-bar pattern. It's also a 2-bar pattern in the raw volume. And then you turn up finally, come back down and make, it looks like about a double bottom there. And you've got a pretty good amount of relative volume coming in there. Yeah, it's fairly sizable raw volume as well. It's about equal with the previous. Relative volume is, looks like about 30% greater than the previous bar. So that was your re-entry there if you missed the low, which was that perfect churn bar on the tick chart in the relative volume. And then we keep turning up, and that's where all that massive amount of volume came in that freaked me out there. And then it just goes screaming up for the next several days. These are just the basic signals that I have built out. This is all based on nothing but volume. I don't have any trend. I don't have any price action conditions. This is all purely based on relative volume. And it may look a little complex, but really it's very simple what I'm doing here. It's a lot of conditions because I'm looking at multiple charts, but it's really identifying volume divergence on one of the charts, and then identifying demand at a low or supply at a high on one of these charts, and then using the volume divergence to actually trigger into the trade. And that's it. That's really it. So this is as simple as I can make it, just combining random charts without looking at, nothing at all about supply and demand, talking about the exact areas I want to trade, and then nothing at all about trend or time frame or operative time frame or, identifying the exact chart that I'm trying to trade. So it's really pretty generic, and yet it's finding a lot of these major highs and lows. That's one little weird one that I need to eliminate. But that's a pretty little volume divergence right there. Early in the morning. Yeah, those are just some of the signals. This is just random whatever. And they're probably 80% at major turning points. That one's turned up a little bit, but you got stopped out of that one for sure. This is only 9 ticks above your first entry, so you probably stayed in that one. This one you got stopped out of. That one you would have made some money on. This one you would have made money on. So there's a lot of these little swing highs and lows that are identified with just the bare bones minimum combination of these 4 charts. But anyway, let me open up a couple of other workspaces. I'll let you guys see some other signals here for a minute. That's pretty much it. I mean, I just want to give you guys a little bit of an overview of a couple of trades I've taken recently and just talk about it a little bit. I don't really have anything formal prepared. Like I said, my main goal has been to just work on the software and get it to the point to where I'm content with it. And then, let as many people as want to get it. I want to pay these guys salaries, but that's really all I care to do. That's that low in the ES before the close. It's that big 2-bar pattern. Yeah. See, here you got a selling climax in the raw volume in the bottom, but then just a tiny little volume bar on that next one. But look at how huge it was when you compare it to similar volume. I say similar volume, but volume of the same time period. Comparing it the way it should be compared. Look at that massive extreme turn bar at that low. Look at this 2-bar pattern there. Yeah, you get a little climax there in the raw volume, but you've got a beautiful 2-bar pattern. That's the main thing that we look for right there. Look at that. Another 2-bar pattern at the low, 3:20 in the morning, 560% extreme churn bar. That's the highest degree. How should I say? That's the best and largest sign of demand coming in at a low that you could ever hope for. There's nothing stronger than that, a big 2-bar pattern, preferably on a volume divergence. But like I said earlier, sometimes it's a V bottom or V top, and other times it's not. It's really just dependent upon the size of the waves, the strength of the move, and the pattern that you're in. I mean, really trading, this is all about pattern recognition. All about pattern recognition. But wouldn't it be nice to have a tool that would help you confirm those patterns when they're actually going to work out and be able to get it into the trade earlier with a little bit more confidence? I mean, that's really all you can hope for, is to be able to trade something that is proven to work well and to be able to execute it properly with confidence. That's really what it's all about. So that's the fastest one. That's the row 1 chart. Let's just go through a couple of them here. This is the tick chart. It's a same sort of low. It's not quite a 2-bar pattern, but see, that's essentially what these are. It's like a churn bar inside of the climax. So a 2-bar pattern, again, it's a function of when does the bar close? When does it open? You really don't have any control over that, and it is somewhat random, which is why you want at least a few time frames to analyze the volume with. But here you've got a selling climax. You see it closes up off the low. And if I split this bar in two, you would see a selling climax followed by a narrower range churn bar. So that high density is inside of the climax bar. So it's like a 2-bar pattern in 1 bar. Okay, you started to get a 2-bar pattern right here before that bar, actually. And then one more little low. Look at that. Perfect volume divergence starting on your best sign of supply coming in at a high, best sign of demand coming in at a low before it happens, before the turn. And there's really nothing that even compares to this as far as identifying where the market's going to be turning. It's really nothing that can come close to it. So this is why I've been wanting to do this on Ninja 8. That's why this has been my really main focus here, getting this to the point to where we can start doing this type of stuff here. So the next thing I'm adding is the bid-ask data for Delta. But I'm gonna do something quite a bit different with that. I'm doing like a relative delta to really basically, just to give you a little bit of a preview, what I'm doing with that is sometimes we get these churn bars that may not necessarily be exactly a churn bar. This is a good example right there. So this is high volume, and it's, of course, when you divide it by the range of the bar, it's going to be high volume per range, and it's a slightly narrower range bar, but it's closing on its high, and it's only just barely a narrower ranging bar. Okay, so it's showing up as a churn bar, but it's really not exactly what I'm trying to identify as a churn bar. So the delta stuff that I'll be doing will eliminate some of these bars that I don't necessarily want to find as a churn. It's basically, it's going to make the churn and the climax a little bit more. Well, I say a little bit. I'm not exactly entirely sure. It might make them way more accurate, but that's the next thing that I'm doing. Giving the signals direction, actually getting long and short out of the churn and the climax, and then adding that delta, relative delta. Look at that, swing low. And you've got nothing in the raw volume there, nothing at all. But here you've got a 2-bar pattern, climax followed by a churn bar, followed by an extreme churn bar right there. So that's your greatest sign of demand coming in, and what happened? Turned up, and then you get a little bit of a pullback, and then what happened? Another 2-bar pattern on an extreme churn bar, your best, greatest sign of demand coming in. Shouldn't be selling this stuff. This is the row 2 chart. So this is sort of like a 2-minute. There's your extreme churn bar at the high. There's your 2-bar pattern, 2-bar pattern here that sets up that volume divergence. And you can now tell, yeah, it's pretty high volume here as well. You got a 2-bar pattern there. But it's almost 8 times normal. So really just an exceptional amount of volume coming in at that low in the middle of the night. So a lot of times at major turning points, you'll see a lot, I don't know about a lot, let's say probably a little less than half, maybe half. I don't know, maybe in between 40 and 60% of your major turns in a lot of futures markets will occur in the overnight session. And I think they especially use the overnight in US equities to kind of disguise some of the volume. So a lot of these guys that are trading these big funds and working for banks and hedge funds and whatnot, they're also trading their own personal accounts. And, there's laws against certain things like that and conflicts of interest and blah, blah, blah. But evidently it's pretty easy to get around that stuff for a lot of these guys. So they'll use the overnight session to kind of mask their volume, their trades, because it's so low in the overnight that even if you do get a kind of a spike in the volume in the overnight, it's really looks like next to nothing when compared to the previous day's close or the next morning's open. So the relative volume will tell you exactly how much, how close to normal that volume is, or how much greater or less. And in this case, you've got a huge amount of volume coming in there in the middle of the night. And then, that's middle of the night. I'm sorry, guys. That's the lunch period there. What I just explained to you is true, though, but this is not midnight. I was thinking that was midnight for some stupid reason. But anyhow, that's the lunchtime low, and then here they take it up into the close. And see, the relative volume is going to tell you whether that's a normal close or a very high exceptional close. So you're always going to have very high volume, total volume at the close, especially in the ES. But the relative volume will tell you, to what degree, how large or small that is compared to the average. So in this case, it was exceptionally high, 4 times. And really just a small difference really in volume from one bar to the next is significant. And when you have a change like that, that's really, really significant. So that's a very, very high volume close there, which coincided with the turn down there, you see? So, yeah, I'm not going to try to go back and try to give you any examples of what I just described, but you can go back and look at a lot of the major turning points. I want to say we had one Memorial Day where they put in a couple of significant lows on lower volume, but really, really high relative volume. But yeah, you can prove that to yourself pretty quickly. I mean, that's one of the main, I shouldn't say main, but that's one of the uses of the relative volume is to identify that really high volume in the overnight, really high relative volume, which doesn't really show up as much of anything. Here you've got another 2-bar pattern. You've actually got volume divergence there in the relative volume. You've got a 2-bar pattern here in the relative volume. You got a little selling climax in the raw volume. You got another 2-bar pattern at the high with just a climax. It's actually a high density climax there, at least in the raw volume. So over and over and over, on and on, we could go on and on. You guys have any questions? Let's see if I open crude. Yeah, there's the low in crude. So I don't think I have the charts open, but I was trying to get long here. I think it was right there. I mean, normally I don't buy these little tiny retracements like that, but it was at a couple of areas, and I was thinking probably do one more little high before we turn down again. So I tried to buy that and got stopped out pretty quick. And then the next area that was coming in was exactly right there on the low. And I marked all that out, but I didn't try to take it. I mean, we've had a lot of these V bottoms and tops lately. It's almost kind of strange, but I mean, I make an exception for it in my trading plan to be maybe 20 or 30% of the trades, but it's been like 80 or 90% of a lot of these major turns over the past 3 weeks or so, 2 or 3 weeks. But anyway, yeah, I mean, that's a difficult thing to buy right there. right? Pretty difficult. But look at how high the volume was, 1900%. So almost 20 times greater than normal. That's a beautiful high right there. Another 2-bar pattern where the churn bar is actually over 2 times larger than the climax. It's kind of an exception there. Normally the churn bar will be lower volume than the climax, but this is actually 2 times greater. So that's a significant high. I guess I wasn't picking up on that when I tried to buy that low there. Well, I didn't have this relative volume on these fast charts. I just had it on the 5-minute. So yeah, I wouldn't have picked up on that. But yeah, now I can. So pretty cool. Here's 2 churn bars in a row. Big, extreme churn right there. 175. I mean, that's typically a pretty sizable signal. Anything over about 160%, 150. So to get something like that, almost 2,000, that's obviously out of the ordinary. All right, let me see if we got any questions.